Beef Market Update with Ann Dunford on RealAgriculture.com is brought to you by Haney Farms. Do you need seed? Find us at HaneyFarms.com. It's time for another edition of the Beef Market Update with Ann Dunford on RealAgriculture.com. Welcome today, Ann.
Hi, Sean.
Okay, Ann, beginning of May, a lot of stuff has happened kind of here in the last month. I guess the biggest news was, let's start right at the top with the BSE case in California. Where is this gonna drive the market at, or if at all?
Well, I think you saw initially, and we made these comments on Real Ag last week right off the get-go, but the initial response day one of the announcement or of the discovery, the announcement of the discovery was limit down. And so that was basically it. Since then, markets domestically in the U.S. and the export partners for the U.S. have done a very good job, I think, of articulating that this is not a food safety issue, demand issue, etc. So I think as we continue to work forward out of that, the play is a completely different than 2003. And as far as how the news is being accepted out there in the industry and in the consumers' perspective. So I think what you see is what you get. The exporting nations have said, we understand this is to be expected. I think some might have even thought it was a relief.
Well, I guess shouldn't the U.S. be writing Canada a thank you letter? So Canada really, really took it on the chin for 8 years of terrible market conditions, had to really fight back to regain international reputation. And here the U.S. gets a case, and it's like, oh, well, we're more educated now.
Yes, they definitely should send a thank you letter. But don't forget, even in Canada's case, it was the domestic consumer that very quickly understood and caught on the story that this was not a food safety issue. And if you remember, go back to 03-04, Canadian consumer actually came to the cattle industry's rescue and bought, granted, cheap product, but bought it in spades. So we should be getting a pat on the back. Don't hold your breath. But at the same time, also export markets are more educated and more mature about how to handle BSE. Well, so that's the other critical point.
The least they could do as a thank you is drop their appeal on cool. That would be the nice thank you.
It would be, but again, I think you better go somewhere else for that one.
Okay. So let's look at Carcass Weights. It is sort of causing some havoc in terms of some of the pricing and some of the trying to get cattle lifted. What's going on with Carcass Weights?
Oh, Sean, and I wrote about this in last week's weekly. It's been we've been at record levels all this year here in Canada. Specifically Western Canada. The U.S. is up as well, so it's a North American situation. Currently, as of last week, steer carcass weights in Canada were 50 pounds heavier than the same week in 2011. And again, that gap continues to widen. It's massive. And so if you don't think that every single carcass that we're adding 50 pounds to doesn't make a difference on the output, the tonnage output, you're kidding yourselves. So it's more tonnage, more beef to get through. U.S. carcass weights are up 20, just so you've got a comparison, right. 20 pounds. And it's not good. It means it's a double-edged sword. We've got, you can say it's the packers' fault. We like to say that. They aren't killing enough cattle. They're not lifting the cattle quick enough, whatever the case might be. On the feedlot side, phenomenal winter. Cattle gained great. Especially compared to last winter. So we've had that on our side. Markets have been a little bit sticky. We all thought these things were going to go higher. And so I think there's been some reluctance to market on schedule. And you can say, I tried to sell the cattle, but the packers have got their kills smaller. Well, they haven't made money since the start of 2011. So again, this thing is so intertwined and complicated, but bottom line is net result is way too much beef on the market right now.
Well, it's not like barley is cheap. We really can't afford to push these weights to such high levels, especially in a declining market.
Oh, exactly. If you were on cash to cash, we're about 20% higher on barley prices today than the start of the year. So there's an impact right there. I don't think, Sean, anybody's choosing to get themselves in this predicament or this pickle. The cattle are simply bigger. They may have been scheduled for a time frame that was too far out after coming through a couple of bad winters and all of a sudden kind of got caught, maybe, if you will. And the cattle should have been moved sooner, actually pulled ahead of schedule. And we've been, when cattle are losing money, as they're starting to now, it's a very difficult decision to say, oh, okay, I'm going to pull the pin at a negative margin on the feeding side. So difficult decisions that are really playing havoc with this market.
Well, let's look at the summer market in general. It's as ugly as you and others had predicted as we move into the summer months here. Hearing a lot of feed yards talk about, this is ugly. Boy, I'm glad. I wish I would have contracted more of my cattle. Or I had one person tell me yesterday, I wish I had contracted some of my cattle, which is really ugly.
Yeah.
So I guess should there really be any sort of surprise here? Because everybody was talking about how ugly this was going to be.
Here's lesson 101 on risk management. I mean, we had opportunities back in February to do some great offsetting of price risk, both on the fat and feeder side, because I'm also hearing the same kind of stories on heavy feeder cattle. And so you've got this situation. Well, look at June live cattle, peaked in February at 129. I think they're trading at 113 this morning. You've pulled $16 a hundred off of the June live cattle. The same goes for August. Look at May feeder cattle. I think they topped at 163 back in the 1st of March. And I think they're at 150 today. So big changes have occurred. All of the good news, Sean, and markets are very good at putting good news in, pulling it out of the marketplace. So all of the good news, really good exports, strong demand, all of these things were kind of put in the marketplace back early this year. And as time's progressed, we've had a couple of demand stumbles. LFTB will be one of them, or as other people like to call it, the pink slime issue. That kind of took a stumble. What the other side we just look at our own little bubble on the beef side. Pork demand's down 10% in the first quarter of 2012. So hard for us to push beef prices higher, convince consumers to buy a bunch of beef when the competition is really struggling and offering some good deals out there. So this is, again, getting back to my comment earlier, intertwined, complicated, and for lots of reasons, this market is not at its low. It's only the 2nd of May, and we're going to make a very seasonal, in my opinion, a very seasonal summer low. So hard to chase the horse when he's out the door, though, Sean.
Okay, so part one to all this was the summer was going to be ugly. Part two is that by fall, we would be back to the spring highs or higher. Do we still believe in part two?
No, we don't, because we're changing the game plan. We've added tonnage to the marketplace that now says it's going to take us even longer to get through the supply story that we had, before we saw ourselves getting on current, thought we could get through. Do I still think we'll get to those levels? Yes, but on a different timeline. It's going to take longer. This is a down out. This is completely different than the summer of 2011. Summer of 2011, remember, we were current, selling the heck out of the market, staying on top of things, and cattle moves through the system. Carcass weights were down. This year, complete flip. We're fighting the market. Carcass weights are up. We're dragging our feet, and we're just not going to get through the summer market in a quick, clean fashion. It's going to be one of those bang them up, knock them out kind of summers, I'm afraid.
So where's the good news? What is the good news here?
Well, I mean, there's lessons. I don't know, good news. There's lessons here. I mean, don't overestimate these marketplaces. A guy has got to be on top of managing risk as these cattle come into feed yards, or as you even buying, say, light feeders to take to heavy feeders. I mean, all of these margin areas are due for risk when you get into these crazy volatile markets. It's going to get worse. I think that's the only thing I'm pretty confident of, that these swings in price will get worse. So don't get too overconfident on all the good news you possibly can, and learn from this. Markets will get better. Things are going to get better, but you hate to see some big losses in the meantime, and how you manage those storms.
Well, with the conditions we've had, the calf crop must be in good shape.
Great, especially compared to last year, calving season this year. I think through most of Western Canada, much better. The recent rains through a lot of the areas in Alberta and Saskatchewan, making, I think, cow-calf producers feel considerably better about grass and moisture and water conditions. So all of those things looking good. But same thing, they've got to sell into a market this fall that I think you're going to see some pretty battered cattle feeders. So at the same time, I think cautiousness is warranted throughout. Yes, there'll be a smaller calf crop, but at the same time, lots of cautiousness as we go forward here. Prices will still be very good on the cow-calf side, but again, this is you got to look beyond the farm gate, Sean.
Well, I'm hoping when we talk in 2 weeks that you have a much more positive story. So there you go.
Okay, we'll work on that.
Okay, Ann, thanks a lot, and we'll talk to you again in 2 weeks.
Okay, Sean, thanks.